Well, breaking news, the Bank of Canada has cut its key rate by a quarter point to 4.25%. It's the third consecutive cut by the central bank amid encouraging inflation data. July's inflation rate was 2.5%. Last week, StatsCan data showed that the economy grew at a rate of 2.1%, beating expectations. And for more on this, let's go live to a financial advisor, Alan Small, who joins me in studio. Not a big surprise from a lot of financial analysts about today's cut, correct?
No, that's correct. Not at all. And, it's interesting. We saw 8 or 10 interest rate increases, right? One right after the next, and now here we are with our third rate decrease this year. And I think the Bank of Canada is really focusing on the economy, jobs, trying to make sure that we don't see a situation deteriorate. I think there's some concern that productivity in our country is definitely not as high as the Bank of Canada would like to see. Obviously, jobs, we're seeing unemployment rates rise a little bit. So I think this is more to hopefully start to stimulate things again, can make sure things end up in a soft landing, as we like to say, not the hard landing that many had feared. So there's talk that we could see maybe as much as one more cut in the last two meetings. Most banks, I think most of the major banks, believe that will be somewhere around 4% bank rate by the end of the year. So that means one more cut. Perhaps they pause next meeting and go one more time before the end of the year.
Circling back to what you were talking about, stimulating the economy, when it comes to major purchases like housing, throughout the summer, the housing market has been fairly flat in terms of year-over-year sales. Do you anticipate that this quarter point percent is really going to do much, or do you really think that we need to see maybe a full percentage point before we really start to see some major changes in how many houses are being sold on a month-to-month basis?
Yeah, and that's a great question. And I think, when we get the first quarter point, everybody says, it's only one quarter point. And now we have 3 quarter point cuts. I still believe, or I'm still targeting the springtime. I think by spring we will see a hotter market. The spring market, the buying market, selling, housing market in the spring. I think that's when we could see a lot of movement. I think up until then, the hope is that we'll probably see one more cut this year at the very least, and maybe even 1 or 2 more early next year. And I think that could, bring on a warmer or a hot housing market come spring.
If we were talking 8 months ago, Tiff Macklem would have said, listen, we're going to be cutting rates, but we're not going to hesitate to increase them. It seems as though the trajectory looks as though we're heading downward with potential more rate cuts in the future. Talk about some of the core inflation data that's heading in the right direction that could lead us towards cheaper borrowing costs.
Yeah, and so when you look at inflation, 2.5% roughly thereabouts, on its way to 2%, which is their preferred rate, which is what their target is. Some measurements actually here and in the U.S. are targeting even lower than 2% on a shorter term basis. Over the full year, you're looking at around 2.5%. So overall, inflation's going to where the Bank of Canada wants it to go. Now they're starting to look at other things, the economy, unemployment. Because remember, they still have a dual mandate, right? They want full employment and stable prices. Well, stable pricing is what we're starting to see. Now they're going to focus on unemployment, making sure people have jobs, making sure the economy continues to grow. And that has been the question, right? We're seeing GDP rates above 2%, but a lot of it was due to, a lot of immigration coming into the country in the last few years and government spend, not so much the private sector. And we know people are still spending money, but at a lesser pace, and they're looking for more bargains right now. So not as much spending as we once saw just maybe 6 months ago.
As an advisor to your clients, do you pay much attention to what's happening in the South and in the U.S. Federal Reserve, whether or not, they're not cutting as quick as we are, but obviously our two economies are very closely tied together. How does that impact some of your advice, and also an upcoming election in the United States? And that could very well change the course of the economy down there.
Yeah, absolutely. And yeah, the Fed is number one, actually, probably more so than the Bank of Canada. I know it's tough for us to say that when we're up here, but the Federal Reserve and their interest rate policy will dictate what the market does, even the TSX. It'll dictate what the TSX does. So what the Fed does, whether they cut rates on September 18th, again, widely expected they will cut, and perhaps cut maybe as many as 2 more times before the end of the year, because they too, the Federal Reserve, they're seeing inflation getting close to their 2% target, and they're also starting to see unemployment rise. So I think both sides of the border, the central banks are looking at unemployment now as a determining factor as to how quickly they cut and and how much they cut.
Alan Small, always appreciate your time. Thanks for joining us.
Thank you.
See you at the next rate cut.